If you've spent any time in the last few years as an investor or advisor, you've had access to more financial information than any other period in history. A barrage of alternative investment headlines and cliches. The efficient frontier curve, the idea that investing in alternatives will improve your risk-return profile. The constant volatility, the false rallies. You've heard of the secular bear market, but at the same time, a continuing bull market. You've experienced unprecedented correlation, resulting in enormous capital loss. As one advisor put it, I was right to diversify, but still wrong. It's time to take a step back. Cut through the graphs and the charts, the headlines and the cliches, and focus on the real mandates that alternative investments should achieve. Every successful alternative should provide the potential for consistent positive returns, low volatility, low correlation to the broad markets, and they should be investor-friendly. These mandates are not only the cornerstone to any successful alternative investment, but they are the foundation and the reasons to invest in the 361 Absolute Alpha Fund. The 361 Absolute Alpha Fund is a multi-manager fund designed to isolate manager outperformance, or the alpha. And it's designed to do this by concentrating on two key aspects: hiring managers with a demonstrated history of producing alpha, and managing market risk by shorting against the manager's market exposures. Let's go back and see how this investment strategy provides opportunity to fulfill our 4 mandates for successful alternative investments by examining the risk-return profile. Our first 2 mandates are to ensure the potential for consistent positive returns and low volatility. Let's take a look at the hedge fund returns from 1998 to 2009. By examining these numbers in 3 different time frames, we can see that the hedge funds did quite well, with return averages ranging from 6.08% to 6.7%, with volatility ranging from 10.5 to 13.85%. Overall, these are great returns given the time period. But if we could isolate the alpha, not only would the returns have been positive every year for the last 11 years, you'd capture between 72 and 113% of the annualized return, while reducing the volatility by 33 to 87%. Consistent positive returns with low volatility. But how about low correlation? That was one of our mandates. Let's take a look at that same period from 1998 to 2009. We can see that this market segment had a pretty bumpy ride over that period. And if we look at manager performance, though they clearly outperformed their collective benchmark, we can see a strong correlation to these market trends. It doesn't really matter how great the managers are, they're going to be subject to the ups and downs of the market. But imagine only investing in the outperformance, and you can see how the correlation trend completely changes, offering a potential for a unique and uncorrelated return stream. So the 361 Absolute Alpha Fund provides the potential for consistent positive returns. It provides for low volatility with reduced correlation to the broad markets. But how investor-friendly is it? Well, the 361 Absolute Alpha Fund is a mutual fund, and that means it provides daily liquidity, transparency, and a low cost relative to its hedge fund counterparts. Clearly investor-friendly. The 361 Absolute Alpha Fund is managed by an investment committee led by Brian Cunningham, Tom Florence, Blaine Rollins, and Jeremy Frank, together averaging more than 20 years of investment management experience. For more information about the 361 Absolute Alpha Fund, visit our website at 361funds.com or give us a call at 866-361-1720.